Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock, including news that China is taking action to bolster its sagging growth. But first, growth in the American services sector rebounded modestly in January, although companies reported that weaker growth of new business, according to two separate reports out overnight. Both reports came in better than markets were expecting. Weaker growth was also the theme of the ADP Employment report, which showed that fewer new jobs have been created in January than markets were expecting. This is the precursor report for this weekend's key non-farm payrolls report. Also overnight, China signalled new worries about its slowing economic growth as it moved broadly to free up more money for banks to lend by cutting its reserve ratio requirement by 0.5%. This could be a prelude to more measures to pump up Chinese economic growth. In other news from China, a long-standing law widely ignored is starting to be enforced, requiring individuals and companies to pay domestic taxes on income earned outside the country. This is sure to echo here in New Zealand, but the bite will be less than otherwise because we do have a double taxation agreement with China. Chinese taxpayers will get a deduction in China for taxes paid here. In Australia, their service sector contraction stabilised in January, and in separate news, the Australian Bureau of Statistics has had to make a second major and embarrassing revision to its data methods, this time on how it records first home buyer lending commitments. It comes after the Bureau admitted late last year that estimates for its seasonally adjusted unemployment were seriously out of whack. And in Victoria, the new Labor government has abolished regulation of building site labour unions. This has raised eyebrows and the ire of some because the announcement was hidden deep within a press release on whooping cough. In New York, benchmark US Treasury 10-year bond yields are up yet again today, now at 1.82%. And late yesterday afternoon, New Zealand swap rates, which had sunk for most of the day, took off higher with definite steepening bias. 5-year swaps are up 4 basis points, 10-year swaps are up 9 basis points this morning. The oil price slipped overnight, is now back below $49 a barrel, with Brent crude at $55 a barrel. Prices sank because American data showed that crude supplies grew more than expected last week and are sitting around 80-year highs. And a key consumer is using a lot less energy than it has used since 1975. Gold is up marginally to $1,264 an ounce. We start today with the New Zealand dollar noticeably higher following Wheel's speech yesterday, is up to 73.7 US cents, 95 Aussie cents, and the TWI is now at 77. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.